Hey guys, welcome back to another episode of Abe's Finance. So today we're actually going to check out Ray Dalio's Ask Me Anything. And if you're not too aware, Ray Dalio is the largest hedge fund manager in the world. He's the CIO of Bridgewater Capital, and he looks after about $150 billion dollars. So when he speaks in the financial world, people listen. And not only that, even central bankers and governments, they listen to this guy. So every time he has something to say, everyone's ears are pricked like this. And I'm one of those people too. And hopefully you might find something that's good out of this. So what I'm going to do today is I'm going to go through the Ask Me Anything, and I'm just going to add what I take away from it, and hopefully I can add a little bit of value too, and so we can really get something out of this AMA, because he's actually dispensed quite a bit of wisdom here, and it's really interesting to see his perspective right up to this minute. And if you look at the picture right there, on that side right there, there's the picture of him with the Ask Me Anything proof. You know, photos or it didn't happen. So it did happen. Let's get into the video. So we're going to the Ask Me Anything. I've done a favor for you guys. I've actually taken screenshots of all the questions. So let's jump in. And by the way, at the end, we're going to look at a few charts. And I always have charts on my videos, and today's no exception. If you can guess what today's chart is going to be, hopefully before we get through this Ask Me Anything, like type in, before we go through the video, what the chart's going to be. I'm going to put one chart in there, and if you know where this is going, chuck it in the comments. By the way, write the timestamp of when you realize what chart I'm going to put on. All right, let's get into it. Question 1. Hi Ray, big fan of your series, The Changing World Order, on LinkedIn, and how it explores current big cycle trends related to the decline of the US and the rise of China. I feel like you're already getting to the charts. As I read through the series, I can't help but wonder, what should I do with this information? What actions can the average person in the US take to mitigate the potential negative impact of the changing world order on the country and on their own life? Okay, so Ray Dalio says, save and put your savings into a well-diversified mix of currencies, countries, and asset classes. Currencies, countries, and asset classes. So think beyond the US if you're a US investor, or your local economy, so that your savings will not depreciate in value. So inflation is a big deal, and will be enough to help cushion the bumps, whatever they are. Think broadly rather than narrowly about the environment, so the context, so that you might be in so that they are safe, satisfying, and economical. Pay attention to the patterns in history and how they compare with what's going on as a way of thinking about the possibilities. Do these things without being stressed. I recommend that you meditate. So the most important tidbit out of this is he's kind of warning us to be conscious about the big picture and to take a well-diversified set of bets to deal with the bumps, as he said, as well as the potential inflation. So even out of this, I get this idea that we're going to have inflation, we're going to have bumps, and also diversifying across countries and currencies tells me that we're about to enter a world where we can't really be sure which country to place our money. And what could lead to that? Well, a lot of geopolitical instability. So right off the bat, he might not realize it, that if there is such thing as an orientation or setup, this is what he's doing. He's saying, this is the world we live in. So anyway, that's what I get out of this. And if you're an average person, Ray Dalio here, I mean, on the question where he says at the end, what actions can the average person in the US take to mitigate the potential negative impact of a change in world order? He's recommending these actions to an everyday individual. So, if you're an investor or stock trader, but if you're investing just in stocks, even Ray Dalio is saying, think beyond just the US or your local country. Think beyond just the asset class of stocks. Be really careful about what's going on in the big picture, because a lot of things are changing. I like this one. Do you still adhere to the open and transparent communication of criticism as described by Adam Grant? What was the most awkward situation this has led to? So, Adam Grant. Let me just quickly explain who Adam Grant is. And I've got a little bit of story to share, actually. So, Adam Grant is a author, and he's kind of like, those self-help or business authors. His book is called Originals, and he's a study into entrepreneurs and original artists who really innovate. And he's made I watched his YouTube clip, and I'll put it right here. So I won't put the sound on, but I love this. This is one of my favorite TED Talks. The Surprising Habits of Original Thinkers. And spoiler alert, what he actually advocates is that people actually procrastinate. Procrastination is not the worst thing. So anyway, I'll give this a pause before I get a copyright takedown or something like that. I'll put the link down to this video below, but when I was traveling in France, in Paris, I was watching this video like once every day, because it just really inspired me to look at the world creatively and not to just work and think about things in such a rigid way, but to give room for you to experiment and procrastinate until the best idea comes. So let's hear what Ray Dalio thinks about that and the relationship with creativity. Absolutely, he's talking about the open and transparent communication of criticism. The biggest issue about radical truthfulness and transparency is to be able to do it with a community of trustworthy people rather than with people outside the community who will use it in distorted ways to inflict harm. Radical truthfulness and radical transparency is meant to build understanding and to thrash things out to get the right answers and to build a community that is based on this. Without it, Bridgewater and I could not have succeeded, and I believe that radical truth and radical transparency in pursuit of excellent work and excellent relationships is the magic potion to success. I also know that we are in an especially vicious world in which distortions, especially often by the media rather than the truth and understanding, can result. So one has to keep that in mind. So he's basically reaffirming this idea that you have to use criticism, and it is productive, just like they are productive for Adam Grant's theories about what it means to be innovative and creative. Being really dead honest is valuable in a context or a business or environment that is okay with it. Because I completely agree to this, because you cannot reasonably trade if you don't criticize your own theories and theses and so forth. You will find a place where you will lose money if you're not able to challenge your own thinking. And every single day, the market always gives you something to challenge your own thinking. I mean, you buy a stock and it never goes like this. It's always up a bit, down a bit, up a bit, down a bit, up a bit, down a bit. Hopefully, if you've bought it, it goes up more often and longer than it goes down, right? I mean, this is one of the few years where it just goes straight down and then just goes straight up and up and up and up. But on the typical trade, you might be losing money half the time and winning half the time. It goes up up, down, up, down, up, down. 50% of the time, you might think you're wrong. But should you disregard your trades every single time? Not really. Should you, when appropriate, challenge your own thinking, go, can I double check my thinking? Am I right? And also challenging other people, because and being challenged by someone else, being open-minded, because challenging yourself is kind of difficult and it might not be that fruitful because you only see things from one perspective. But sometimes when you look at something from another perspective, you can find the weaknesses in your analysis. And this is not necessarily trading. This is like if you want to launch a new product like an iPhone. Let me tell you one thing. Steve Jobs had multiple teams to create different versions of an iPhone, and they challenged each other and they showed the weaknesses of one idea when they had other teams' ideas, and it sort of compared. Using comparison, comparing and contrasting, they could work out what kind of works, what doesn't work. And that is, in my view, that is the essence of creativity. When you're able to bring in varied perspectives of what could be, challenge it until you find the truth. And that process is a harsh, hard, uncomfortable process. But the results is like getting a diamond from the rough, and you get diamonds at the end. And I completely agree with Ray Dalio. I'm not sure if I added to that or made it sound more confusing. Hopefully I didn't. If I actually made you sort of help elaborate and really try to get why he wants this radical truthfulness and transparency and the value of that. If you like that, hit the like button. That really helps my channel. It really does. Hopefully that interpretation is helpful. I mean, this is probably why I did this video, because I love just the way Ray Dalio thinks. And I think in many ways like him. And he can elucidate and explain things in a different perspective that I wish I could explain in. And I'm not necessarily going to say he's more eloquent than me. He is. But what he offers is a different perspective for something I feel in my heart also. And using his words helps me explain a worldview that I hold dear also. So this is a really, really good question. I enjoyed talking about this. Hopefully you enjoyed listening to it. Next question. All right, let me get my computer working. Okay. Good afternoon, Ray. With the Fed buying corporate debt and money being pumped into the markets and economic cost of lockdowns, do you believe current equity prices are a house of cards with high inflation coming, and what would you advise to hedge? Or the best? Okay, so this guy or gal definitely knows about what's going on in the market in terms of the debt, what's happening, how the Fed's flooding the market with money and debt, and how we are, overvalued, all-time high prices on the stock market. It looks like inflation. What to do to hedge? I mean, without looking at the answer, I can already guess what Ray's probably going to say. Diversify, which I agree with, and he's probably going to mention asset classes. Commodities is probably a good place to look at. Let's dig into his answer. I believe that with the enormous amount of debt and money that has been created and will be created in the future, the most important thing is to pay attention. The most important thing to pay attention to is the value of debt and money relative to value of assets and other currencies. By the way, spoiler alert, I've read through every answer, so I know what's coming up. So if you get my expressions, hopefully that doesn't spoil what's going to be in the answer. Or you can press the pause button and read it yourself before I go through it. But let's read in this together. Okay, I described in my book Principles for Navigating a Big Debt Crisis, which you can get free here. The monetary policy that is going on now, which I call monetary policy free, MP3. I love that file format. It's great sound quality. Anyway, that was bad. and which is the central government borrowing a lot of money and the central bank prints to direct it to where they believe it needs to go. I know that this is necessary, okay, and at the same time know that not enough attention is being paid to whether this debt and money is going to things that will produce broad-based productivity gains. He's saying this money is not going into productive places. As for stocks, they compete with bonds. With bond interest rates where they are, bonds are trading at roughly 75 times earnings. With the amount of money out there and cash being a bad alternative, there is no good reason that stocks couldn't trade at 50 times earnings. That is also true and very concerning, because I did finance, and when I'd studied in school, it was always 15 PE ratio, price earnings ratio, and 30 was on the high side. All right, 30 was way too much. And now we're at 30 in the market. And he's saying we can go up to 50. There is no traditional valuation metric that can justify 50. It's crazy. And this is this is going to be a new normal. Even I find this a struggle to accept, because think about it this way: you're only going to earn, if you put money into a 50 PE ratio stock, you're only going to earn 2% of it back in terms of the return. If you want to earn back your original deposit investment, that's going to take you 50 years. I mean, I've got assets that generate me something over 10% yield. I've got assets that I think are generating me over 15%. That means in around 6 years or 6 to 7 years, I generate the cash flow from those assets will actually cover my investments. I'm okay with that. I make all the money back in 6, 7 years, and I still have the asset and it's still generating me income at that rate. I'm not comfortable with buying an asset that takes 50 years to get me back my return. Back my investment. That's the way I see it. But that's the world we're going to be in. So, I don't know. I'm not a fan of it. But he's saying accept it. You get the idea, he says. Next, you get the idea. Just like you might never have expected bond yield to be slightly at or slightly above 0% unless you studied history, you might not be comfortable with these kinds of multiples for stocks. However, all investments compete with each other, and where would you prefer? I would recommend smart diversification in terms of asset classes, currencies, and countries. I think it's time to repeat for emphasis: asset classes, currencies, and countries. For me, my sort of mantra, if you will, is currencies, commodities, bonds, equities, and property, and Bitcoin, and gold. But anyway, currencies, commodities, bonds, and equities. Got to have some diversified goods with those four. But he's saying also asset classes, currencies, which is an asset class, and countries. So maybe you want to look at countries also. So countries, currencies, commodities, bonds, and equities, which is stocks. Spread your eggs through multiple baskets, he's saying. Okay. All right, number 5. Thanks for doing this AMA. I'm gonna have to speed through this a little bit. All right. My question is, do you think it's too late for the US to correct course and maintain its status, or is China pretty much guaranteed to take over at this point? If not, what needs to happen to the Chinese to prevent the switch from happening? I might actually group the China questions together. So this is question number 5. Let me see. We will get... All right, we're going to do this also. We're going to talk about the China, how he looks at China. By the way, just a heads up, in the financial community, there's been whispers or whatever it is, people have just been saying, China, Ray has been very, very favorable to China. He just has a very positive view about China, to the point where people are sort of suspicious about why he's so positive and so appreciative of China. Maybe you might get a whiff of that when we look at his answers. I don't know. my heritage is Chinese, so I actually understand quite a few things about China. This is an interesting, well, this is probably one of the most interesting things you get in this AMA. So with that being said, let's get into this answer. Because of what we have done in the past, we have circumstances that we now face, which are much more challenging than if we did things differently. The biggest question is how we behave ourselves as individuals and with each other to deal with these challenges. The capacity of humans to adapt and deal with problems is enormous if they approach their challenges in a united way and smartly. I worry that we are our worst enemies and/or that we collectively aren't willing to make revolutionary changes beyond the best path of dealing with our circumstances. It is certainly possible we can get on that path. Excuse me. So the focus now for him is the rise of China and the decline of the US and the US dollar as reserve currency. Look, whatever I just read, it just sounds like it's a hard task to stop the decline of the US, to reverse this decline, and we are probably our worst enemies causing this decline. If we, by fluke, get out of this, can fix this problem, good luck. That's what he's saying. He's saying these challenges are enormous and we've got to deal with it intelligently. And I personally don't have that much faith when you have, such a big challenge for people. I mean, can people really rise up to this occasion that easily? I don't know. Okay. Okay, one more thing. We're going to get into China. China. What are the biggest things people who ignore China are missing? Ray says that is a very civilized society that is doing extraordinarily well and is not consistent with the stereotypes that one might believe are true. It is by no means perfect, nor is any other country, and should be open-mindedly assessed based on evidence rather than emotionally reacted against based on derogatory characterizations. That is an interesting comment, because there is some truth to that and there is some untruth to that. And I would say that as someone that is Chinese by heritage. 我会中文啊，没问题啊。你好吗? Yeah, I know. I've been there many times for extended periods of time too. So China is a place where a Westerner is not going to understand, is just not going to understand. And I've traveled to many countries. And let me tell you, I've been to Europe, the Middle East, I've been to US, of all places, please. Asia, a lot of places in Asia. China is a different beast altogether. It's a different beast altogether. The Japanese and the Koreans, they are very collectivist and they've got like different hierarchies and very respectful and so forth. But they've got a level of integrity by the way they do things. Japanese are polite and respectful, and they're all Koreans are a bit rough, relatively rougher and more aggressive, and that's cool. And they make amazing barbecues. They're not as maybe timid as the Japanese. Now, the Chinese have a bit of both of that. They're very respectful and they can be aggressive, but they also have another thing also. So they're actually, most Chinese people are very nice people. Very nice people. What the issue is in China is the administration of the regime is so authoritarian. And I'm trying to say this without offending anyone, but they're so authoritarian, they've got so much control, and if you are a politician in there, it's so... let me just say, you're in a good place. You're in a really good place. If you are a politician in China, and if you can cover your ass, because you will get perks left, right, and center, no one can see it. No one knows. It's all behind, in the shadows. But you will be very rich in China. and you will get away with almost anything. You could hurt people, like you can kill someone, and all you need to know is the right person to get off the hook. The law doesn't really apply. The law is relatively fluid, and in the same vein, people's morality are relatively fluid. So most people in this world, I truly believe, are good people. They just want to, find the one they love and raise kids and just, be relatively wealthy and have a comfortable life and, enjoy their life. And I firmly believe that. In China, or Chinese people, they do have a lot more moral flexibility. And you can read the classic Chinese military history books, and there's a lot of sneaky tactics in there. They are very sneaky, not as a people, but they have their tricks. More than you can imagine. I have a book there, classic Chinese military tactics. 1 second. Alright, I'm not sure if you can read it. Right there. Right there. And obviously it's got Sun Tzu's Art of War in here. But there's volumes of it. There's volumes of military tactics. They're just this is what the Chinese know how to do. They've got 10,000 years of figuring out how to beat the enemy in warfare under whatever tactics possible. These guys are good. And Chinese are not particularly innovative and technologically wise in the last couple hundred years, but they've got a lot of wisdom, and they've got a lot of tactics and strategies that the West couldn't even dream of. So anyway, I disagree to some extent with that. They are good people, but when they turn against you, you do not want to mess with them because you don't know where they are coming from. Because they're the guys that wrote The Art of War. If anything, the Chinese are intelligent almost to a fault. Scarily intelligent when they are. And they turn against you, watch out. This idea that Ray thinks that they're no means perfect, but if you're open-minded to it, it's a derogatory characterization. I'm like, okay. I mean, you might, I guess. But I would say, from my background, I know perhaps a bit more than Ray about this. So, anyway. And also, without going too long-winded, which Ray has been accused of being through different interviews, one thing about the Chinese is that their moral ambiguity stems from the Cultural Revolution, which is a period in time which is very horrific, and where the Chinese government got everyone to turn on everyone and dob people in to say you're not communist enough. And no one could trust anyone, including family members. It's like if you have trouble at Thanksgiving and political clashes, imagine 1 point something billion people and they're getting their own family members into jail and beaten on the streets by turning against each other politically. That's what happened in the 60s. And even the young Chinese people don't realize this these days. So there is no morality because family members turned against family members for an extended period of time during the Cultural Revolution. A lot of the Confucian values and the moral values were destroyed during that couple of years. So, people lost a lot of the morality, and then you have a political system that doesn't really have rule of law, very flexible morality. That's all I'm going to say. We're going to finish off with this last question, and we're going to jump into the chart also right at the end. So, home stretch, guys. Hey, Ray, thanks for doing this. I think it's clear that the inequality in this country has gotten too rampant and we have lost our ways as a capitalist nation. I believe you recognize that central bank stimulus has played a big role in this. Is Bitcoin a potential answer to this issue that the global new world fiat monetary system has caused? as a big Nassim Taleb fan, I have to ask you to do deadlift. Let me just say, he's probably going to ignore this question about the deadlifting. I think that Bitcoin and some other digital currencies, this is Ray's answer, have over the last 10 years established themselves as interesting gold-like asset alternatives with similarities and differences to gold and other limited supply, mobile, unlike real estate, storeholds of wealth. So it could serve as a diversifier to gold and other storehold of wealth assets. I'm clearly adding a little bit of emphasis in this because I think that he's trying to allude to gold as the alternative to Bitcoin, as what you should really think about. The main thing is to have some of these assets with limited supply that are mobile, that are storeholds of wealth, including stocks in one's portfolio, and to diversify among them. Not enough people do that. I'd agree. As far as Bitcoin is relative to gold, I have a strong preference for holding those things which central banks are going to want to hold and exchange value in when they are trying to transact, which I think is a really valid point. If you are really trying to diversify away from the fiat financial system and you have concerns for that, I think gold should not be dismissed. And people say, look, it's tangible, you can physically touch it, you can't get hacked with it. Well, people can rob your home or something, but regardless of that, you can put it in vaults, a secure vault. But he does really make a point that's often forgotten by even the people that you might hear on YouTube or wherever that extol gold. Like, it's been like Peter Schiff's or the Mike Maloney's, who I love to listen to. But we don't mention enough that they are the store of wealth for the central banks. They will never get out of fashion. And I've actually been looking at digging into what's happening with gold at the moment and the supply shortages long term. We're kind of running out of gold. So that's another thing too. So that's my couple of takeaways. That's a very, very important point he's mentioned that has really reminded me why you need to remember about gold and not just go into Bitcoin. Bitcoin is a sexy thing, and I believe in Bitcoin, but in the same way, I don't think we should get into Bitcoin and forget about the OG of these storeholds of wealth that are outside the financial system. Never forget gold. I think that's what he's saying. So those are a couple my few biggest takeaways, and I wanted to add a little bit of value in there for you guys to see my take on it, and hopefully you guys get something out of it too. We're going to jump into the charts. We're going to look at something about what he's talking about, and we're going to jump right into it. If you guessed this right, give yourself a pat on the back because we are going straight for the US dollar. And it is looking pretty bearish ever since the highs it reached in late March, early April, or more like just late March. And it's just been, there's just basically no recovery. It's just gone straight down. That was a good area. If you shorted, that's great. I mean, I thought we were going to take a reversal from 92 cents, but we didn't. We tried to stage a rally. The market did, but it just flattened out and dropped here. We are at, whoa, my standing desk just dropped. My apologies, guys. Hopefully you can still see me. Okay. That threw me off a bit. But that isn't the long-term trend. We can't really tell if this is going to be a long-term trend or not, because to do that, we need to look at something like the weekly or the monthly to see if what he's saying is true. Now, if we look at the weekly chart and we go all the way back to the early 2000s, 2002, this drop down is only a proportion of the other drops and the other rises. It's happened probably dozens of times throughout the last 20 years, a move like this has happened. It's not necessarily a structural complete decline of the US dollar. As you can see, this arrow here has you can see this blue arrow. That's what we've experienced the last couple of months, but it's no bigger than what we experienced, the decline we experienced in 2017. It's less than the massive move from 2014 to 15. I mean, if you're talking about a real decline, you're talking about from 2002 all the way down to 2008. That was from 120 cents to 76 cents, 75 cents. That's huge. 100 cents or so to what? 90 cents? It's 10 cents. It's not 120 to 75, which is, if my math is correct, is that 45 cents difference. This is 10 cents difference. We're not quite there yet. But will we get there? Maybe, you know. And we've had also a lot of exceptional circumstances, like the pandemic, just, you know, and stimulus and all this sort of stuff. It's not truly indicative. Now we have got one from 1980s. 1985, how interesting, where from this chart, it's like the all-time high. And then it had a very precipitous decline, the US dollar. That was the Plaza Accord, if people are familiar with that, where they sat down with all the major currencies, all the major countries, and they basically said, we are going to devalue our currency, and you're going to basically, what was it? We're going to devalue our currency, make it weaker. So Germany and Japan and all these countries, you got to make your currency more expensive because we're not exporting anything. They basically put a gun to people's heads or the country's heads to force the US dollar down. Now that was a move. We had another move from around 2001, 2002, massive decline to 2008. Are we going to have something that is as extreme as that? And I usually don't do these trend lines, but I want to do one today. Okay, one of these moves. If we do that, if we have one of these trend lines, if we push this and copy this, we should get something quite similar, somewhat, a bit more extreme than that. Let's do it with now. Where could it get down to? If he's right, if Ray is right, this is what we could be looking at. And I might just switch myself onto this side of the screen. Hello from the other side on the left. Okay. I mean, if we are going to extrapolate that type of move, we could drop down to 60 cents, which is disastrous, by the way. Disastrous. We're nowhere near that. We've dropped 10 cents. To drop to 60 cents from 100 cents, we got 30 more cents to drop before this move is done, if you believe in it. Do I believe in it? I don't know. I don't know what I believe about this. I don't want to believe anything about this, because if the US dollar drops in this way, we are in deep, deep doo-doo. And we're probably going to see like a new reserve currency. Maybe it's Chinese currency, who knows? But this would almost be the decline of the US. I hate to say. The other chart we do need to look at or want to look at is the USD to CNY, or rather, no, CNH USD. USD. Come on, come on. This is the Chinese yuan, the currency versus American dollar. And we're going to look at it on a weekly basis over the last couple of weeks. And the Chinese currency has had a massive bullish run relative to the US dollar. But it has been US dollar since for more than the last half decade has been declining. And the US dollar has been relatively stronger. Will this change? Will we break this trend? Let me get a trend line in there. Will this trend change? Will this trend change? I don't know. The only way we could ascertain if it's changed is if we break something around here. Or we break this level. If we can break through here, or better yet, break through here and go further past, you know, this might be the change of the guard. That's all I'm going to say. Anyway, that's my video. I hope you got something out of it in terms of my takeaways and sort of my value adds, my perspectives on there. And also, if you enjoyed the charts, you know, please, yeah, hit the like button. And if you like, hit the subscribe button too. Hopefully, I'll see you in the next video. This one was a long one. But, you know, I love doing this, and hopefully you love it too. So the subscribe and bell icon to see more of this stuff. Hopefully the next video is probably going to be like a bit more straight to the point. But I really thought that this video had a lot of value for hopefully you guys. So with that being said, have a good one. I'll see you in the next one. See you then. Bye.